Hi everyone, this is Rob Roy and welcome to the Elliott Elite US Market Update. Let's get you caught up on the markets over the past couple of weeks. As you can see, we are still in this consolidation pattern. Now here's where it gets really interesting. Where do we go from here? And what exactly is this pattern? Clearly consolidating over the past 2 weeks and gone absolutely nowhere. And could you make a case for drawing the lines this way and saying that we are still within the big triangle? I don't think so. At least in my opinion, that's not how I would draw them. I would stay with what we've been talking about, which is connecting these highs. The more times you touch the line, the more accurate the triangle, whether it's the top line or the bottom line, becomes accuracy wise. We had a clear breakout back here, so on the 9th and the 10th, so we had the breakout day and the follow-through day, which is what we talk about all the time, is that you need a confirmation day, a follow-through day. So we had that. So in my opinion, this is a clear upside breakout, and we've just been consolidating since then. So to me, that's the accurate triangle. We break out, we're consolidating, and we have a little mini descending triangle right here if you want to draw lines connecting the highs and lows again, which is what we've talked about doing with these triangles. So we've broken out and we're consolidating the breakout. Normally what happens when you break out is you break out, you take off and run, or you come back down, test the breakout, so you move back down towards the point of the triangle, and then the market takes off and moves. Or on a rare occasion, you have a false breakout or a head fake, if you will, and the big move actually becomes to the downside. And remember, we've already talked about how far to expect a move, and that has to do with the mouth of the triangle. So as you can see clearly, once this does continue its breakout or break the other direction, whichever, it's going to be a fairly large breakout. So if we put the Elliott wave on the chart, see what that's saying. It's pretty much confirming everything that we just talked about. We have the big triangle. We have all the ABCs, which you know are consolidation patterns. We completed the wave 5 in the big Elliott wave pattern, and we are consolidating here right around the B. So if this is correct, the labeling that is current, we have our A, B, and then the C would come back down in a flat, and one of the flat patterns would stop just short of the A and be right around the point of the triangle. So we could clearly be telegraphing the fact that we're going to come down, test this, and then we see from that point when we reach the test, is it a false breakout? Do we continue lower, or do we test there and we move higher from there? So everything is basically in line, that we are just consolidating this breakout and then waiting to see if the flat pattern is completed or if we take off and run from here. Another indication, as you know, we like to look at the SPY and bring volume into the mix. And as you would expect, over this consolidation that's occurred here, we've got very low volume. And with the low volume, usually means consolidation, and that's exactly what's going on. So everything is lining up that we are in the process of some sort of a breakout in the markets. We don't know for sure which direction it's going to be yet. We have a confirmed upside breakout, but as I mentioned, there are certain times it's the lowest percentage of anything that can occur, but there are times when you have a false breakout one direction and then the big move goes the opposite way. Don't see a whole lot of other signs. If you're looking for fundamentals, again, I'm not a big fundamental person, but economy looks pretty good, things like that. Don't see any other signs that could indicate that we're going to have a big, massive breakdown, but something geopolitically could happen. There are unexpected black swan type events that could occur, so you never try to guess what the market's going to do. You're not smarter than anybody else, so don't trade by what you think the market's going to do. Trade by what the charts are telling you, and there's no better indicator, as we've discussed numerous times, than Elliott wave to tell you where things are likely to go from here. So follow the charts. That'll be your best chance for success. Wanted to update you on the VIX, as we talked about for a long time. 15 had become a support level after being resistance for years, basically. And now we've broken that level. And note what excuse me, let me try that again. Note what has happened, he tried to say. We broke this support line, and we've come back and tested it a couple times, which means it is now resistance. Old support becomes new resistance, and that means we're back down to 10 being the support level again. The markets are still moving. There's still some volatility there. It's better than when the VIX was down at 10. I would have preferred if the VIX stayed above 15 and kept all the bigger swings going in the marketplace, but the market doesn't really care what I'd like it to do, and it's going to do what it's going to do, which is what we just talked about a few minutes ago. So we have broken 15. 15 is now resistance, and we'll see where the VIX goes from here. Likely would come down and test 10. Now, if we come down and test 10, then that normally means that the market would be moving to the upside, and that could go along with the continuation of the confirmed upside breakout from our triangle. I wanted to talk about the dollar. We spent a long time talking about the dollar in the last recording, so I'm not going to go back and redo all that again. I just wanted to show you an update of the chart. We noted in the last recording that this was likely an impulse breakout, and I did want to show you that from this breakout, we've only had one little bit of a pullback, and note that the pullback was right to the 23.6% fib level. That does not count as a correction. In Elliott's world, a 23.6%, even though that's a Fibonacci number, for Elliott, it doesn't count as a corrective move. We have to correct at least to 38.2%. So my point is, according to Elliott, this is still in the A-wave impulse, or wave one of a larger pattern. We'll just have to see how that plays out. But at this point in time, we're still in the breakout impulse. It's been moving for a while, so we would expect some sort of a pullback or a retracement. We aren't going to go up forever. Nothing goes in a straight line, and I don't think our dollar is going to as well. But it sure is interesting. Once it got going, it really moved extremely well. So here's a chart. I'm going to come back to this dollar chart in a minute, but here's a chart of TNX, which we talked about was the interest rates, and we had been highlighting this zigzag that started here when we broke resistance and we moved to the upside here. Then we had our retracement, and then we moved to the upside, and we've been looking at around 32 as our target. And I will go ahead and draw the actual Fibonacci extension lines here, and you can see we didn't make it up to the nearly 32 that we were talking about. We've moved up right into the middle between the 61.8 and the 100% Fibonacci levels, Fibonacci extensions, and we've come back down. So why? Why have we come back down? Are we just testing, which we could be, or a very important Elliott wave rule to remember is always look at the bigger picture. Talk about this all the time in educational events, seminars, webinars, etc. In the world of Elliott, you always want to look at the bigger picture. And if we put the Elliott wave on there, the full 5-wave directional pattern that most of you are so used to within Elliott wave, it tells you what happened. What happened? We had a wave 5 target here, which we hit. So we hit that target and we pulled back down. So I like to look at zigzags. I really do. I find them to be very accurate. Are they 100% accurate? No. 100% would have gotten it up to the 100% extension level, which we may still go to. But what happened was we had some resistance here right when we hit the wave 5 extension target, and we've backed off a little bit on interest rates. Another thing that I would like to show is you also want to pay attention to what happens over the shorter term. And if you can see here, there's another zigzag pattern that has set up. And if we do our fib retracement, you can see that we came right to the 38.2% level, and the touch I'm talking about is right here, right there. We went right to 38.2, and then you draw your fib extension from that 38.2% correction, and we are supposed to, sorry, I took my finger off, so I'll redo it. You are supposed to hit a 61.8% fib extension when you have a 38.2% correction. And where did we go? Right to the 61.8% fib extension, dead on the nose. So there's the extension level, right at 61.8. This zigzag worked perfectly. So I'll take these lines off and label it for you. Now we have an indication of why we haven't reached the 31.82 level, which we're fairly close. We're, 50 cents away from it. Was because, one, of the bigger picture of the full Elliott wave pattern reaching its target, and then the fact that we had a more recent zigzag pattern. And what do you think you want to focus on when you're looking at these corrective patterns? The more recent pattern. And that absolutely worked to a T. So there is the zigzag that occurred within the wave 5. So that was a zigzag, a wave within a wave, which happens a lot in Elliott wave. As you know, we've backed off, and we will see now if we come back down, find a level of support, and then eventually go back and fulfill that larger zigzag. I happen to think that's what's going to happen, but again, we don't trade what we think is going to happen, and I'm not trading just off what I think is going to happen. I'm trading off the larger zigzag pattern. But it's very logical for us to have reached resistance there and backed off, is my point, and the fact that we haven't gone straight there. Other patterns have superseded it, especially the larger 5-wave Elliott wave pattern, again, that most of you have learned about in your education on Elliott wave. And I do want to note that all these things that we're doing here, I haven't found any other place that you can label, identify, and then use that in your own personal trading the way that Integrated Investor and Profit Source do. They are by far the best Elliott wave tools that exist out there. If it wasn't, I wouldn't be using it. I would be using whatever I thought was the best. I'm using this because I believe it's the best. It's the best that I've found. And it's just amazing what you can do with it. And if you understand it, and that's the key. Elliott wave is not just simple. It's complex. And there's a lot of moving parts. Education is key. Stay here. Go through this with us. We will educate you on how to use Elliott wave properly, because there's a big difference in your success results from thinking you know how to use Elliott wave and then using Elliott wave properly. Those are two completely different things. And when you do fully understand the rules, the labeling, where to label, what's going on, you will see a tremendous improvement in your success rate in your own trading. I also wanted to show you a couple of other in the search. I talked about last week the fact that you can run searches with Integrated Investor and Profit Source, and I have my custom created searches that I look for within Elliott wave, and I wanted to show you a couple of them that have shown up multiple times. You like it when you see something that, and I run the searches every day, so when they show up multiple times, I'm meaning more than one day. So that tells you that the pattern is consistent, and I usually get 8 to 10 results, so these two have shown up out of 8 to 10 results of the entire market a few times. So we're going to show these as case studies moving forward, just like we've been doing, and we've been so amazingly spot on with the ones that we've shown you already. Just go back and look at the recordings and you can see. But we're in a wave 3 right here, and I've mentioned before that a lot of people, when they were learning Elliott wave and focused on the 5-wave Elliott wave pattern, were told don't trade the wave 3, wait for the 4, and then trade the 4 to the 5 or the reversal from the 5 back to the 4. And I'm here to say you can trade the wave 3. It's the strongest. That's why we're learning about zigzags, flats, triangles, and all the other things that exist that are waves within waves, because those are very helpful, especially when trading a wave 3 impulse. Why would we not want to trade the strongest wave? So that's the further education there. So there's a wave 3. I like that one to continue higher. At least that's what the charts are showing. And then also we have ESRX, which is showing that It's in a wave 5, so this would be more of the traditional sense. So the Union Pacific is in a wave 3, but here we're in a wave 5. And if you look at that, you might say, well, that's 68% correction there. That's more than the 61.8%, but not really. When you come back here and you actually draw the retracement lines, you can see that we're just bouncing. I mean, it had been a little bit off of that, but we have hit that 61.8% and held 3 times now. So we've tested that all-important 61.8% fib retracement on the wave 4 multiple times. That stays in place. Remember, this should have been one of the basic rules that you learned from day 1. That stays in place unless it comes down to here. So a little 68% correction doesn't mean anything. But if we hit 78.6, well, that's different, and that disqualifies the wave 5 from continuing higher. But we haven't hit that level. We've, again, found support at the 61.8. We're moving higher. So this looks like in your traditional wave 4 buy in the Elliott wave that this should continue higher and reach somewhere around 89.90, somewhere in there. So 2 case studies that we can follow in the next several weeks with these recordings, and let's see how they pan out. Let's see if they do as well as all the ones that we've looked at in the past. Also wanted to talk, if you listen to Tom Scollin's wonderful report that he did highlighting gold last week, I wanted to show you that this is the GLD, which is an ETF that trades on the U.S. market on gold. He was talking about the charts that were showing bullish over in overseas in the different markets that he highlighted. And we haven't quite had that big move here in the U.S., but when you look at this pattern here, this could be what's known as an island reversal. So we have a gap down here, consolidated sideways, and then gapped up. In the case of an island reversal, you would expect that we move higher from here. What else did we talk about? When we showed the chart of the dollar, we also showed that it's been motoring higher. That's challenging for gold. But what do we do for? We're due for some sort of a correction in the dollar, and if we do, that could be the catalyst to get the GLD here in the U.S. moving up with gold as well. These GLDs, these ETFs are supposed to track the spot price. They come close. They're not exact, but they come close because there's other derivatives involved in creating the ETFs. But I think that we may be following in line with what Tom illustrated to you in last week's recording. So if you haven't looked at that yet, go check that out. It was very informative. So that wraps things up for this week. Hope you've had a wonderful couple weeks, and we'll be back on track to update you again next week. Take care, everybody.